Good morning, everybody. Welcome to the Flow Show, Tuesday, the 23rd of September. And before we get stuck into it, just want to make you aware of the sale that we've got going on in our TFP program, Trader Funding Program. We can get up to 50% off and 30% off all accounts, 50% off some of the accounts. So if you want to get involved in that, now's the time to do it. This is a limited sale, only running to the 29th, I believe. I'll pop a link in there for you. So have a look at that, check it out, and you can get yourself a bit of a discount on our prop accounts. So if you're in that, wish you all the best. That also gives you free access to Forex Analytics as well, depending on which account you take. So, and if you're a current subscriber, that will just get added on to your subscription already. So get involved. Morning, Kay. How are you doing?
Morning, Ryan. Morning, everybody. Yeah, doing well, mate. Doing well. Interesting moves that we are seeing right now. So that's going to keep us busy. It was really, really quiet overnight, but the morning has been spiced up all right.
Yep, and data is becoming important. Much as I said it would, this is the first round of data after all the central banks and markets are moving on it. We'll get all through that in a minute. Right, let's get stuck into the news anyway. Going to start off. The RBNZ, they've been looking to appoint a new governor. Apparently, it's going to be announced as soon as tomorrow, and there's a possibility it could be the Bank of England's Deputy Governor of Financial Stability, Sarah Breeden. She's on the MPC as well. So that means she will be coming off the MPC. Now, I did wonder what the turnaround for that would be, whether it would leave the MPC short going into November meeting. But my good mate Michael Brown seems to think that, or suggests that the appointment may be announced, but she won't step into the role, or the new person won't step into the role until the end of the year, turn of the new year. So there will be time for both, for the Bank of England to find a replacement. But we'll wait and see confirmation. It's only rumoured at the moment that Sarah Breeden is in line for that. Another central bank surprise was the Riksbank. They cut rates by 25 pips, whereas they were expected to keep rates unchanged. They took their rate down to 1.75%, which is just 25 pips above the lower end of their neutral rate, or expected neutral rate, 1.5 to 3%. Quite a wide margin. As we know, guesses about the neutral rate are just that, guesses. What it means for us watching rates come down to these neutral areas is that's basically the sweet spot for central banks. If they go below it, it means something's changed and policy is becoming more accommodative, as in they're trying to help the economy. At the moment, we're in a period where rates are coming down after an inflation spike. So rates are coming down to normal. They're not going up to stop inflation still. They're not going much lower to help the economy. It's all about balancing off the trade-offs between inflation and the economy. So use these neutral rates, as I say. If they're going below their sweet spot, then economies are looking weaker, and then they're moving into a more expansionary setting. That's what we use these for. So anyway, bit of a surprise cut. Though they do say that they expect the rate to stay on hold there for quite some time, barring any changes to the data. Of course, there was a dissenter. Deputy Governor Seam entered a reservation against the decision to cut the rate and wanted to keep things unchanged. So as I say in the statement, if the outlook for inflation and economic activity holds, the policy rate is expected to remain at this level for quite some time. Kay, bit of a surprise one, but not a dovish cut at all.
No, neutral. They're going to full neutral, and actually they plan to keep the rate unchanged now for a year, basically. Unless, of course, things change. But interesting that they revised their GDP a little lower for this year, but then with the same margin higher for next. CPI, they think it's going to be transitory. Yeah, it was a bit of a surprise. But then we saw the reaction in the Swedish kroner. It got a little slap around the ears, obviously, because of the surprise cut. But it's already regained most of what it's lost on the back of it. So the market is still not changing their view, basically on the Swedish kroner. We have to know this: the Swedish kroner is actually among the call them the G11 or so. I think it's the best performing currency in 2025, which. Yeah, and we knew it was strengthening, but I didn't realize it was actually the strongest one of the whole lot. Yeah, I don't really know why they cut right now, because they had a bit of a higher inflation print as well. Economy, okay. I mean, it's not like the big rush, the gold rush, but still doing all right. So maybe they just want to go and say like, okay, now we are done 2025, come 2026, and they just want to be yeah, I don't know. Is it making Sweden a bit more attractive, perhaps, in a certain way, for investments also? Could be, because if you lower, of course, the borrowing rate for investments, it could end up being actually a pretty good thing. But yeah, okay, just leave it where it is. And Swedish krona, all in all, not too affected by it.
Yeah, exactly. Right, moving on to the S&P and the latest Reuters poll ahead of their meeting on Thursday. Our 40 of 41 economists expect the rate to stay unchanged. Only one said they were cut to negative at minus 0.25%. 21 out of 25 says the rate to be at 0% come the end of 2026 as well. So no real changes there except for one. And four more who don't expect the rate to be at zero by the end of 2026. We'll find out exactly what those guys are going to do on Thursday. Over to the data, and it's PMI day. Kicking off, do you remember any before Australia? No, they got the ball rolling. And soft numbers there for both manufacturing and services. Manufacturing 51.6, services 52, both seeing a half decent drop there. Coming into Europe, we had France going backwards. They had a little dead cat bounce, it now looks like, into expansionary territory last month. Now they're back where they were before and far worse. Manufacturing dropping to 48.1. Was expecting only pull back to 50.2, but stay in expansion, not to be. Services also going backwards, 48.9 versus 49.8 previously. Germany, they did a bit better on the manufacturing front. That went backwards though to 48.5, but a decent jump in services into expansion, 52.5. We'll have to see whether that's a bit of a dead cat bounce as well. The pan-Eurozone number reflecting what we saw there as well, with manufacturing moving back into contraction, services moving up a bit further into expansion, likely on the back of that German number. Then the UK had a stinker as well. Manufacturing 46.2 was expected to rise a point. Services was expected to pull back to 53.4, but it came in at 51.9, and that gave the pound a bit of a cruncher. So not overly great in Europe, but still not great in the UK, and that's weighing on euro sterling more so than the numbers in Europe. While we're in the UK, they had a 30-year auction, which received the fewest orders since 2022. The bid to cover there 3.07 versus 3.2 prior. So not a great take up over there. And this is going to be something we need to keep an eye on as we rock towards the budget. There's been further headlines on the budget, a think tank advisory thing run by someone who is part of the Labour conglomerate, shall we say, or the Labour Party in general, Torsten Bell. He's probably 10 times worse than Reeves in terms of being fiscally irresponsible, and he's part of that, or was part of that research department. Anyway, long story short, they're demanding an increase in income tax, decrease in national insurance, lots of policies which don't sound good at all. And the Labour Party and Reeves takes a lot of influence from this think tank. So for those in the chat room, you'll find that in the newsroom, all the details, not looking good. And the market isn't going to like that moving forward either. So we're in the snowballs rolling down the hill in terms of how things might get worse for the UK ahead of this budget or over the budget. We're also seeing, according to Deutsche Bank, an increase in pound bearish option bets with euro sterling in the frame. Lots of activity going through the options from 87.50 up to 90. A lot of people getting worried. It must, again, Kay, they must have been watching the Flow show, because we've been saying it for the last 2-3 months, if not longer. But people are now putting their money where their mouths are, which has two effects, really. If they are all hedging up those sort of areas, if the price goes up there, it has the effect potentially of putting the brakes on further rises, because as people get the price above their options, which are likely calls, they're going to start hedging those or taking profits on those options, which might limit further gains. What do you make of that news about this options activity? To be expected, Kay, or a bit of a surprise?
Yeah, no, it's what we've been talking about as well. I think is the closer we get to that budget, the more the market is probably going to lean towards that side, and obviously options is one kind of play. But yeah, that's what I've been saying as well. I mean, every time we go into a big data point, and we could compare it, obviously, whether you get a big data or a big news event, it's got the same effect, right? Yeah, and as we have been saying over the past big data points. I've always been watching what the people were doing in the options markets, and we have seen that they really contain the moves and the price action. So yeah, once we get up to their strikes, they could stop or at least hold the market for a bit because they want to make their premium back, of course. But where are the levels? Have you heard of any levels?
Yeah, I put it in the newsroom. The stuff starts from 87.50 all the way up to 90.
Okay, here we go. I missed that one. Cheers. Yeah,
Let me see if I can dig it
they're
out.
still not huge notionals. If you talk about really the market embarking on a selling spree for the sterling, we're going to be talking about different amounts than those seen over there. But yeah, it's a start.
Yeah,
I guess we are going to see more as we get closer to the budget. We are like what, 2 weeks off? 2 months actually,
yeah,
day for day, 2 months off, right? Yeah, I think we're going to see those bets ramp up the closer we get. But we are getting a lot of information already before that, right? So if it should, in theory, on the 20, when it comes to the 23rd of November, just be an announcement of everything that's been leaked. So, but yeah, I think that the speculation will ramp up against the sterling
yeah.
the closer we get.
Now, as bearish as I am over this, particularly over the pound, we have to know that, with this news of an uptick in options hedging and the market getting bearish, we do risk a sell rumor buy fact situation happening if the budget isn't as bad as feared. So this is the market trading a negative outcome, or hedging against a negative outcome. I'm trading a negative for a negative outcome, but I'm gonna still be watching the headlines and watching what's dropping and watching what the budget news and leaks are, because if it comes to look like it's not going to be as bad as expected, we're going to see the quid rally. So I don't necessarily need to wait until the actual budget before I'm either out the trade or holding on because I think it's going to be bad. If I know beforehand what it's likely to be, that will guide my trading. So as much as I'm happy to sit in it, I'll be guided by the news. So I could be a bit like dollar yen in the Fed. All my Fed trading was done before we got to the FOMC meeting, and I closed up just before. So yeah, it's not just about holding on and waiting for the event. It's trading the market into the event. Right. Anyway, get rid of that and move on to the other stuff. ECB's Nagel is not worried by the current valuation of the euro. Says a stronger international role for the euro is desirable. Let's see what happens if they sailing over 120 up to 125. We'll see how worried they are. Fed's Bostic sees little reason to cut rates further now. He's been a one cut man for quite some time. He got his cut and now he's happy to keep rates unchanged moving forward. Feds and Muslim, he supported a 25 pip cut as a precautionary move to help out the labour market, but sees little room or limited room for further easing. Says monetary policy must continue to lean against inflation that remains above target. Says the overemphasis on the labour market could lead to too loose a policy and do more harm than good. Said he would back further cuts if more signs of labour market weakness emerge, provided risks of persistent inflation and rising inflation expectations haven't increased. It says unemployment and the neutral run rate of job creation could be as low as 30,000, i.e. the break-even rate for jobs could now be as low as 30,000. So based on that, Fed's Muslim could potentially be a dissenter the other way for keeping rates unchanged. We've got a load of these Fed speakers out this week, and it's the first round of comments that are always the most important because it gives you their views after the FOMC. 2 weeks later, they'll be saying the same guff over and over and it won't matter. So we just get to see how some of these Fed heads are leaning. Fed's mirror was out again. Says current Fed policy poses material risks to the US labour market. It's appropriate for the Fed's funds rate to be roughly 2 to 2.5%, but sees a neutral rate close to zero. And says multiple Trump policies are lowering the neutral rate. He says a series of 50 basis point rate cuts will recalibrate policy. And after those steep cuts, a little more to do with rate cuts in 2026, 2027. And unless something changes, he will continue to press for rate cuts and is willing to dissent again. Fed's barking, says low employment, wage gains and stock prices all have been support for consumer spending. Fed's Hamak says the Fed is being challenged on both sides of its mandate. We should be very cautious in removing policy restriction and expects another wave of price pressures early next year. Treasury Secretary Bessent is going to interview 2 more Fed candidates later this week. He says that there'll be a total of 10 out of 11 candidates interviewed by the end of next week. He's now going to begin interviewing existing Fed board members and regional bank presidents now that the FOMC quiet period is over, and will start narrowing the list of interview candidates by next week. So we could have at least a short list by next week, and then we'll see who's going to be in the hat. China, they've been buying gold, well, couldn't tell you for how long now, a couple of years, hand over fist. Now, apparently, according to reports, they want to hold all your gold reserves as well. Well, global and foreign gold reserves. Kay, I'm going to throw it out there. What's the deal with these guys? Are they trying to corner the market here?
Well, that's what I was saying in the room. Yeah, it's probably because they've been relaxing rules on holding and stuff, and now their next move is to tell the sovereigns, non-US sovereigns, come on, I'll be the custodian for your gold. It's like Uncle Scrooge, yeah, wants to sit on a very big gold pile. As I was saying, it's a political move, really. If you read through the lines, it's like another little anti-dollar move, I dare I say, but I also put the necessary caution there because we all know what China can do and how they can change all of a sudden. It could be a bit of a Hotel California if you put your gold over there. You know where you get in, but you can't get out. So not sure if because they were especially talking about the sovereigns. So yeah, not sure if that means that those sovereigns will buy more gold and put it straight away in China. They are after all also in the psychology of things. They are also investors, and an investor wants a safe place to put his assets in. So yeah, will they succeed? Probably because they have, in parts at least, because they have relationships, obviously, with a lot of nations in Asia. But I would also perhaps think about some in the Middle East that could get tempted. But yeah, I mean, it's boosted gold by another $30 this morning. But again, I mean, does it mean that people need to buy more gold? The thing is that whenever they shuffle it around, we've seen that when the states were doing it as well, repatriating gold from the BOE, it's caused a big demand in physical, and that was really dragging prices up. So yeah, we could be in for a little round here, but again, as I say, how many will be tempted to place their assets in China, right? But if they succeed to do it, it's another big move, and dare I say, it's a bit of an anti-American move as well, or even anti-Europe perhaps, because we know that the Bank of England is one big custodian for gold, right? So
Yeah.
yeah, then remains to be seen, but in the meantime, it's put another $30 onto an already stellar bit gold.
Yeah. I mean, tinfoil hat on. If we have problems with China, because there's obviously stuff still bubbling away with Taiwan and still this three-way thing, Russia, China versus the US and the West. If things do come to a dangerous head, one of the first things that will probably happen is they'll hack financial markets and there'll be a crash and whatever, and everyone's going to turn to gold, and
Yeah.
China's
Oh
going to be
yeah.
the one holding it. Could that be why we've seen a bit of buying coming in the US session? Maybe the Yanks have wised up to that and doing a bit of stockpiling themselves.
Yeah, definitely. And also, there's so many factors I've been talking about over the past as to why, because we saw the comeback of the relative comeback of the dollar, but then gold didn't participate actually on the other side. It's a hedge against everything that can go bad. That's what I've been saying. The dollar is one thing, but you can't trade gold on the back of the dollar or silver or metals or whatever. If they catch another safe haven bid, gold trades above 4,000, maybe 5,000. Who knows? And if you look at and you take this particular thing that we had today again as a move, as I was saying, against um, the US, or also it's not going it's not going to push people to take profits on their gold holdings, because there's still all the reasons why, and it's also, if you think that the inflation is going to remain stickier in the US, for instance, it's also a hedge against that one, because inflation means weakening de facto of the currencies, the value of currencies, right? So, and then you dive into safe haven. So it's yeah, it's an additional reason why to hold gold. And also why yesterday, or when was it, Sunday night or so, I bought it again, because there's just no stopping, and all the reasons why holding it are still very, very valid.
Yeah, and we need to remember as well that Russia are I think the fifth largest gold holders in reserves, and if they don't want their stuff to get pinched by Western sanctions, they can give it to their old mates in China, who can happily sell it on the market for
Obviously,
them at these elevated prices, offsetting
obviously.
tariffs and sanctions and all that sort of guff. So I definitely feel like there's more going on behind the scenes than just a market in bullish mode.
Absolutely, it's been going on uh, since the start of the Ukrainian war, basically. Huh?
Yeah, yeah.
And
So
then, of course, there were other reasons, like inflation, etc. And but yeah, I mean, there's absolutely no reasons to not keep on holding it. Now, okay, we're traders. This being said, I mean, everybody does what everybody wants. But there will be times where we will have setbacks. We have seen that. We have seen that in silver. The other day was a prime example as well. Went up to what was it, $43 or so, and then all of a sudden, the demand dries up and you drop a buck and a half. In gold, it can happen too, right? You could see if there is. Let's assume, for instance, that by and it would be a big surprise as we stand now, because Xi pretty much laughed in Trump's face last Friday. Um, would be seen as a big surprise. But imagine for a second that the US and China find a reasonable trade deal. Gold is probably going to lose $300 pretty quickly, seeing the speed that it's been going up. We can't ever exclude stuff like that, right? Because the
yeah,
species will say like, okay, this is a very positive news. There's no reason that we hold all our speculative loans. So they are going to go try everybody to squeeze through the eye of the needle, and you may lose $200-300 very, very, very quickly. So just be careful with what you do at all times. Obviously, it's not because it's bid like hell that tomorrow it's going to be bid as well, so to speak, right? But for the time being, nothing has changed.
Yeah, and the higher and faster it goes, the higher and faster it can fall, or the lower
Absolutely.
and faster it can fall the other way. Right, Kate, any other news?
No, we can look at what's going to happen today because we have two interesting speakers, I would say. A
Who we
bit
got?
later today with Bowen and Powell.
Oh, is it? Oh, yeah, Powell speaking today and Bowman. Yeah,
Yeah,
and
Bowman, and
well,
of course Powell is going to be very, very interesting, and he will be the bigger mover. Let's face it, if he moves things around. But Bowman, I'm very interested in knowing why she didn't descend, or why she was not more dovish. Or maybe she will explain that she's one of the lower dots as well. I don't know, but it's interesting that she and Waller didn't really descend for a bigger cut.
yeah, that will be the interesting one. And well, let's see if they give us something later on. Both of them speaking on the economy and whatnot. I know. What do you reckon? Powell tends to, when he speaks after an FOMC, he seems to sometimes go not the opposite way, but it's almost as if he looks at what the market's done and then decides whether he needs to steer it back a bit. Do you think the market has? Well, it was buying dollars, now it's gone back to selling dollars again. Do you think he needs to do a bit of steering in this one, or this is just going to be a rinse and repeat explanatory of the meeting?
Unless he wants to influence the dollar, I don't think he needs to change anything. Look at the S&P 6,700. Look at the yields. Okay, the tens have moved up slightly. The twos, yeah, BPs, not like 10s or 15 or 20 BPs, like maybe like 10 BPs or so. It's not materially away from where we were then. Yeah, you're talking about a 10 BP move, which is not really anything alarming for a central bank, yeah, let alone the Fed. So no, he doesn't have to change anything. Now, if he thinks that people have maybe not fully understood or left with doubts about what he really meant over the FOMC, he could change some things. But we have seen, apart from when he changed his tack on unemployment over inflation, we have seen that most of his interventions coming on the back of the FOMC, he pretty much just repeats what has been said on the FOMC, right? So always possible, but I think the surprise would be that if he changes much, and I
Yeah,
don't think there is any reason to change anything. Inflation is
yeah,
peaking, and the jobs market is slowing down. He has touched on the FOMC. He has touched on that employment and the relation to migration. Does he want to stress it a bit more today? Possibly, but that would mean nothing bearish, because if he says yes, migration had a material impact on the employment and on the break evens, it's not going to be a bearish thing, a dovish thing, right? So it's probably going to be understood as mildly bullish, perhaps, but hawkish. But I think he's going to steer in the same direction as he was on the FOMC.
yeah. I agree with that too. We also get the PMIs from the US as well. It's both services and manufacturing. So again, we'll get a little idea of how the post-summer sectors are doing, or the economy is doing post the summer. Healthy numbers we saw last month. Not that much change expected. A little dip expected in manufacturing. Services, a little dip as well. Let's see if they follow the rest and see steeper losses in those, or whether the data once again is holding up nicely. So that's everything we've got coming up later on. Right, going to prices and stuff. There's been a few moves. Fred's asking about euro sterling. Let's bring this in a little bit. We are looking like we're now starting to push up. I was I'm in an ahhing whether to add to my longs at this 87.20 when we were knocking around it early over the PMIs. I left it, and then the UK did the damage, sending it all the way up into the 87.40. So this 87.20 level I've been harping on about, it's holding. We did get a dip to what, 16, 17. Not going to argue too much about that, but we are above it, and if we continue to stay above it, then the upside is anyone's guess from here. Now, we could be talking 88s from this point. It's coming to a little wider one. It's all a bit messy, got lots of lines going on here. I've got a zone 87, called it 87, 60, 75, okay, where we've had traffic previously. It was a decent top back in November 2023. So this is some solid areas up here. If we're above there, then we could be heading all the way back up to the 90s. That's the possibility. But we'll do nothing if we can't stay above 87.20. So this would mark a big potential break point if we do stay above there. For me, it's all going to plan so far. The market's attention swinging to the UK fortunes and the budget and Reeves and all this stuff going on, as well as the data. And I think bad data in the UK is going to outweigh bad data in Europe. Because it's one country against all the others, and not all countries are doing badly, like Spain. They're holding up as well. So, yeah, I just think with the ECB looking to stay where they're at, and the pressures mounting for the UK, if the economy rolls over, then the BOE could be forced to cut a bit quicker. Though within the PMI, the UK PMI, there was note of heavy price pressures, so inflation's still in the pipe, and even the OECD has given some bad news to say that UK is likely to have the highest inflation in the G7 due to all the prior fiscal policies, national insurance rises, minimum wage rises, and all that sort of stuff. So a bit of a problem for the Bank of England to deal with moving forward. Anyway, we've got the break. It's got every chance now stretching its legs and moving higher. 87.20 is your first level. 87, 86.90 are your next support points. Fred, let us know what you're looking at in euro sterling. Okay, given my views, but let's hear what you think of that. Michael, dollar mix, is it going to test 18.20s next? Who knows? We're still waffling around this zone. Look like we might be going for a test of 18.50. That's run out of puff. Now we might be looking for a test of the low end. I don't see any reason at the moment why we should break any of these areas unless we get some news. As we've been saying, we moved into the realm of the USMCA. Yeah, we could get a test of 18.20s again, Michael. What I'll be looking for is if we pull up short of this low, a bit like we pulled up short of the 18.50. So maybe we're looking for something that happens, something like that, and then maybe we just waffle around here for a bit until the next direction. I wouldn't rule out moves down and testing the edges, but can we? Yes, of course we can. Will we? That's another question. The question is, what you're going to do if we do get down there? Are you going to play the range, or are you going to look for the breaks? It's really Mexico retail sales. Yeah, it could be a bit of a mover, Michael. Whether it's enough to push the edges, I don't know. But yeah, it's what you're going to do. I'm still a bit short. Kay, you're looking at this one. Would you play the range a bit in here, or just wait to see till we get some clarity?
Yeah, waiting for clarity. Are you still short? I thought you bought everything back as well in the 20s.
No, I kept me 21s.
Okay. Yeah, I mean, I think the mixed traders are looking at the Canada because we've got this USMCA thing that can get put on the table every day because if the Chinese piss off Trump enough, he may turn his attention to some countries where he can have an impact. So we can't rule out much in the mix right now. But I was hoping for a more thorough test of 1850, viewing it as a good top and then enter short again, because it's still, if you look at risk markets, like for instance, where money is flowing to, like in the equity markets, etc., they're still doing well. And so if you think about carry needs a positive environment. There are other risk factors, but that's then expressed, as we've already been talking about so many times, in gold, etc. But yeah, I think the Mex can after another bout of maybe corrections and jumpy and a bit like we've seen between 1855 and 1885, we can do it now between 1820 and 1850, and just change the bungee jumping range a bit, and then before we break the next leg. I still think the overall path is down, but I would really love to see a test of that 1850. Actually, maybe secretly hoping for a bit of a Trump line to take it up there, and then we will see what happens there. Yeah, I know. Yeah, Michael is saying buyer at 18, 20, 25. Yeah, that's a bit what the American side of our community wants to do. Let's put it that way. Uh, but no, I'm still very much the other side, and I'm still a rally selling right now until proven otherwise. Until he shuts the border with Mexico. But I think
Yeah.
Scheinbaum and Ebrard have done enough to stay on the right side of Trump right now, and so I'm not overly worried with the Mexican peso. That's my view right now. Canada is much weaker
Yeah.
than the peso, much weaker.
Yeah. So Michael, 18, 20, 25. If it were me, I'd try and get it close to that 1820, more than 1825, because that's given we're only trading in a 50 handles here. 25, you're taking sort of 30 handles, should I say. You're losing a chunk, a percentage. If you're trading at 25, it's a bit more in the middle, rather than trying to see if you can get maybe 22s, 21s, just work a bit of a better level, give yourself a bit of room if the range holds and if the range bounces again. But yeah, I'm less inclined to go wide on my entries for that one if you're trading inside this zone. Yeah, try and be a bit more picky perhaps on your levels, but your trading is your own, mate, as you know, and wish you well with it. Last one I'm going to look at before I hand it over is dollar yen. We've now come out of the 148. 3 times we tried to break higher, failed, and if we can't go up, there's only other one way we can go. We went down to this 147, 60, 65 level. It held for a minute. Now we're back under, and now we're holding under. So we're either going to flop around this level for a bit, or we're going to push lower down to 147, the low 147s, and see what that's made of. I'm still long a bit, still happy to stay long. I've got my stops well out the way, down in the 146s still. So I'm going to try and stay in this one as long as possible, just see what's going to happen. But otherwise, we could just be mooching around in the range with no real direction. We'll see what that data does later on. If it's good, then we're probably back into the 148s again, and we'll see how long that lasts. Right. Well, Ali, we did talk about gold. I think we talked enough about gold. How high can it go? Yeah, the sky's the limit. If I knew how high it could go, I wouldn't be sitting here talking to you guys. I'll be trading it and sailing my gold yacht around the oceans. Physical demands. Well, physical buyers are always part of it, but they're not going to be as big as central bank buyers at the moment. It's not physical buyers who are taking this higher. Well, physical buyers are central banks. But if you're talking for industrial use and that, They're paying through the nose at the moment for that sort of stuff. Right, Kate, over to you, sir.
I was just going to have a look at gold, and thing is physical bias. You were talking about those ETFs, etc. Ali. I mean, these are people who are not really planning to sell them out because they're buying for a certain reason. They're buying for security. They're buying for stuff, and they are going to want to see a complete turnaround in economic and geopolitical situation to get out of them, right? Okay, we've rushed through that 37, 34. It's even holding, was even holding overnight. It's really there's nothing has changed here. The next level to me is really 38, 38.80, and then the 4,000. But with that's stuff coming out in China, and if you take it as a kind of a political move, it's I think we're I never want to talk about like blow off tops, etc., etc. But it does feel like whether it be into the end of the month or the end of the year, we may see some kind of like stuff where everybody goes completely ballistic and taking dollar up to where nobody expected it to go at any time soon. So, but then we will need to get a bit wary, I think, about. As I said, I mean, there could be a time coming. I'm still long, but I mean, I'm gradually moving up my stops because I don't want to run into the kind of situation that I described a little bit earlier. Is that all of a sudden we have a $200-300 sell-off? So I'm already putting my stops into positive on my longs. But on the day, as I was writing up this morning, we are already building fresh supports. Yesterday we had this little bit of a double top here, 37, 37.05. Well, yesterday we couldn't even get there, and it's building. Remember what I showed you on silver a while back, when you can't even get to the support, but the people are already coming in to the market and buying it ahead of supports. That still means that we are in a very, very bullish scenario. And the same thing happens on gold. We don't see retracements really down to supports that can tell us like, okay, I mean, we're testing it because people are taking profit. It just seems that there's still too much demand. So I'm not going to stand in front of it on the contrary, still a bit long, and it looks like we could actually be hitting 4,000 relatively quickly, maybe even before the month is over. Okay, danger levels, I would say these are the smaller intra move supports, I would say, but the real level that I think will be watched closer is starting from here, 36.34. As long as we're above there, forget about reversals, etc. It's still going to look very, very bullish. And like the big reversal can only come below 3,500 right now. And then we will have to see what the market wants to do. But that's $280 from where we are now. But that's what long-term moves do to you. Silver, I think, is getting a bit more interesting. We are turning around that 44 and a quarter, which is also we had this big spike higher than the top, another top around 44.20. And that's exactly where we are trading right now. I still think that the next big level of attention should be around this 45.40. I've really put my take profit right below there, even on my long terms. I just want to have some reflection time, I'm going to say, to think about what's going to go on, whether we are straight away going to $50 or try to start correcting just or consolidating a little bit in a wider range. Cable, it's still interesting that we held this little level here. We're turning around 135, 10.15 right now. It's not been affected too much by the lower PMIs. It's rather the euro sterling where I'm still long as well, because the rest of the dollars is looking a bit softer. But the levels remain unchanged, and that's going to be interesting this afternoon on the US PMIs, and then especially Powell, I would say. Look at either side of 134.5 and 135.40. Okay, those are the two. That little range building that we have been doing. Those are the two levels where I think the market may get a bit interested to move it around more. And looking at the distortion we had with the PMIs, again, if you look at strength and weakness from one currency versus a dollar compared to another one, sterling may be the one that is doing a bit worse when it comes to a weaker dollar, stronger dollar, sorry, where the euro in turn is looking a little bit better. And that may be doing on the other side of the medal, if Powell would be a bit more dovish than expected, that would be the one that I think could do a bit better versus the dollar compared to the sterling, and that is 118.30. If we get back above 118.30, I think then we could see a push back up to maybe even 119, but we will have a few stops in between every 30 points or so. There's going to be little levels in between. But between the two of them, those are what I think will be the difference. And it's still the same on the Aussie and the Kiwi, okay? Aussie is doing better. We are above 66. Yes, we are needing to push through that 66.25, ideally 66.40. But again, and I've been showing that already a lot of times as well, look at the difference between the Aussie and the Kiwi. The Aussie is still pretty much the better one of the two. So if you want to form an idea about what am I going to do with the dollar, depending on what Powell says or depending on what the PMIs are saying, look at the differences between those different currency pairs. And I think that's all enough for today, Ryan. I'm looking at the clock as well. Wishing you all a very good day.
Thank you very much, mate. And yeah, we'll call that a day for today. Thank you, folks, for coming to the Flow Show. We'll catch you all on Face a bit later. Have a great trading day, everyone. We'll see you tomorrow.